Building capacity versus advertising. This is critical for us as new clients directly affect our long-term workflow, given there is weekly touch points with clients. So as you know, Jamie, Diane's got quite a big bookkeeping business as well.
Yes.
Our clients vary from $300 per month to $20,000 per month. So staffing for this variance is difficult. It is getting easier as we've scaled up over the last 18 months. However, I'm looking forward to learning more about what we can do in this regard. So, you know, it comes back to then, I guess, what you've mentioned there, the forecasting of the capacity. Is it more related to that capacity plan?
I would say so.
Yeah.
Yeah, absolutely. So with the bookkeeping side of it, whether those clients are the $300 a month or whether they're the $20,000 a month, it's so critical to go back to your capacity plan with the team.
Mm-hmm.
And, you know, whether Diane has one team or two teams, it doesn't matter. Go back to the team that, you know, and look at the capacity of that team. What is the physical capacity of that team? And then compare it with the actual forecasted fees. And you'll soon find out whether, you know, Ed, you always say it's like water in a glass, you know, like capacity a full glass is full of capacity. What you want is you want the water down a bit so that you can throw more clients in.
Yeah.
Because if you're trying to tip water in a full glass, it's, you know, everyone's just going to lose the plot. So you must have some spare capacity. And around that though, just to go further, Brenton, you must try and measure, you know, whether if it's time billing or whether it's fixed fee. You must try and measure the speed of the jobs. And there's another comment on there that from Paul, does Jamie use time dollar budgets in Carbon? And their answer is we do. What we do is we have hours in Carbon in a budget, and you can also have a dollar budget in there as well. So that's right. The more metrics you can use to manage your business is good, but you don't want you know, paralysis by analysis. So you need to sort of keep it as simple as possible, but you need to focus it around the ideal team. I come back to the teams and charge out rates per person, you know, and having it's having the right people doing the right type of work, you know.
So Ed, just a quick question back to Diane's comments there in relation to building capacity versus advertising. And that kind of makes me think about, you know, turning on and off the marketing tab. You know, how do you look at that issue? Because you may have capacity now and then you turn the marketing tap on and all of a sudden your cup's overflowing. So how do you manage the balance there?
Well, it's harder for tax clients because they might come and see you today, but they may not come to do their work for a year. Mm-hmm. So, you know, we're constantly measuring the prospects versus the clients versus the actuals. So it's you know, we're constantly, we run a spreadsheet based on the number of clients we've seen. Are they likely to do?
Lost him again.
We're measuring our workflow, work capacity constantly. It's a bit easier with the bookkeeping because when they want bookkeeping, they want it straight away. They don't come back to you in 12 months' time to do their work like a lot of the tax clients do. But it's you know, when you get to a point where the existing staff's too busy, but there's not enough work to hire new staff. So, you know, so the new staff might be only 20% capacity. So you're investing into a new person until there's enough work there to keep them busy. But that's a challenge that every business faces, and you've just got to manage capacity with actual as you go along. And obviously, if you're lucky enough to go into advertising or marketing, and you know how much it brings back consistently, then you can plan for that as well. But often marketing is a hit and miss thing. And you know, like we move clients. So for example, you know, one of our teams might be, as Jamie says, you don't when you work out the capacity, you don't have it at 100% capacity. You have it at about 80% capacity, so that there's you know, capacity there. Sorry for using the word constantly, but to take on any new business, like often when they're so busy, they don't talk to their clients about, you know, doing a cash flow for them. In fact, the opposite. The body language says, I'm just too busy. So, you know, clients will come to you and says, oh, the bank said I need to do a cash flow. And you go, oh, do you really need one? You know, like the body language, you know, turns business away because they're at full capacity. But, you know, you want the situation so that, you know, they're talking to their clients and encouraging them to, you know what, well, let's do a 12 months capacity budget for you, but let's do a 2 years or a 3 years. You know, you're looking at encouraging work to come in, but that's a function of how busy they are. So you need to keep it at about 80%. So the analogy that Jamie used was, you know, the water in the cup. If you have it right at the top, and then you try to pour some more water in it, it spills over. So that spilling over of the cup is like pushing business away from you, and that's because it's a function of how busy they are. So every team should be at about 80%, but often, you know, when they go above that 80%, so let's say a particular team picks up a really big client, and that big client's like $40,000-$50,000, but that client is perfect for that client manager, so you should go into that team. So what we do is then we move some of the smaller clients or another client that might be better matched to another team. So we're constantly, you know, working the capacity with the actuals, with the new clients that's coming in, and we work with our spreadsheets to see how many new clients we've picked up and when are they going to come on board, and were they just tie kickers or are they real, or they, you know. So it's a constant